Hello and welcome to my channel Wonders of Price Action. Now, this is the monetary policy decision by ECB today. Here is 7th March 2024. Now we are going to see what happens, what are their stance on this. The Governing Council today decided to keep the three key ECB interest rates unchanged. Since the last Governing Council meeting in January, inflation has declined further. What has happened? Okay, inflation has declined. Still, they are not uh, decreasing the rates. This is point very important. It is to be noted. In the latest ECB staff projections, inflation has been revised down, in particular for 2024, which mainly reflects a lower contribution from energy prices. Staff now project inflation to average 2.3% in 2024, 2% in 2025, and 1.9% in 2026. They are hoping too much. The projections for inflation excluding energy and food have also been revised down an average 2.6% for 2024, 2.1% for 2025, and 2% for 2026. They are very optimistic to get the 2% target by 2026. What does it mean? This is the position when uh, uh, they can decrease rates. But what are they going to do? Let us see and understand this. Although most measures of underlying inflation have eased further, domestic pressures remain high, in part owing to strong growth in wages. Wages are uh, growing. Financing conditions are restrictive, and the past interest rate increases continue to weigh on demand, which is helping push down inflation. Staff have revised down their growth projections for 2024 to 0.6%, 0.6% with economic activity expected to remain subdued in the near term. Thereafter, staff expect the economy to pick up and to grow at 1.5% in 2025 and 1.6% in 2026, supported initially by consumption and later also by investment. The Governing Council is determined to ensure that inflation returns to its 2% medium term target in a timely manner. Based on its current assessment, the Governing Council considers that the key ECB interest rates are at levels that, maintained for a sufficiently long duration, will make a substantial contribution to this goal. The Governing Council's future decisions will ensure that policy rates will be set at sufficiently restricted levels for as long as necessary. They are not showing the signs of decreasing the rates, even though there is a decline in inflation. Still, they are not. It means they are keeping the policy very restrictive, and it is bullish for euro. The Governing Council will continue to follow a data-dependent approach to determining appropriate level and duration of restriction, because they will keep watching the data. Data can change anytime. But currently, euro is bullish according to this restrictive policy. In particular, the Governing Council's interest rate decisions will be based on its assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. That's the and they have kept the interest rate same. The interest rate on the main refinancing operations and the interest rates on the marginal lending facility and the deposit facility will remain unchanged at the rate of 4.50%, 4.75%, and 4.00% respectively. So I'm not going to detail at the asset purchase program right now, but there is a quite good inflation report. Still, they are very restrictive. So this makes Even they haven't changed, they have not increased the rates. Still, this is a very restrictive policy and it looks quite bullish for euro. So let us see what happens. This is my analysis of monetary policy released today on 7th March 2024. Like my this video, subscribe my channel, and also let me know in the comments what do you think of this policy. Bye for now. I'll be coming in the next video with another analysis. Bye.